Hello everyone, and thank you for tuning in to this holiday update. I'm Joshua Dobi. Appreciate so much your willingness to take a few minutes and to tune in here, especially during this holiday season. I hope that this finds you enjoying this time, albeit I'm sure it is very different from holidays past, and I hope that it turns into a very blessed new year for you as well. Well, I'm going to jump right in to be respectful of your time. You've heard me talk about for a number of weeks the possibility of new legislation coming through Congress relative to COVID relief or COVID-related financial relief. Well, we finally got it. It got through Congress. It got to the president's desk. It took a little while to get it past the president's desk, but he has indeed signed it into law. And so we have our next round. And so I want to dive right into that and give you some what hopefully are helpful details, either for you, folks you know, folks who may be colleagues of yours as well, or this may apply to you at some point in the future. But definitely want to take a few minutes and give you an update here. So I'm not going to go into, just in case you're wondering, all 5,593 pages of the bill. No, really, 5,593 pages of the bill. Now, to be fair to our friends in Congress, that included not only COVID-related financial relief, but also a spending bill that gets us well into 2021. So it wasn't just the COVID-related financial relief, but still almost 5,600 pages worth of text. I'll admit it, I did not read every page. I briefed through it as quickly as I could in terms of finding the points that I thought would be most helpful to you. But if any of you have read nearly 5,600 pages, let me know, because I'll be more than happy to send you a prize, because that's good nighttime reading. But at any rate, let's go ahead and dive in. Relative to what happened for the COVID-related relief, a lot of things that we anticipated were going to be included, in fact, were included. Now, we're not going to get into every single detail of the COVID-related financial relief that is found in this bill. Just going to share with you the points that we have found to this point that we think are most relevant to the largest number of people. Now, there are going to be differences, obviously, among different folks in different situations for whom these things may apply. So very, very important. We're going to come back online. We're going to actually give you some more details in subsequent updates and be a little bit more fine-tuned. But since we had this and had opportunity to chew through it in this week here between Christmas and New Year's, we wanted to be able to give you these points as quickly as we have them. So I have a couple of them written down here, so please forgive my notes as I'm going through them, but I just want to make sure that detail-wise we are in the place that is most helpful and obviously accurate to what was passed by Congress. First big point, and this is going to apply to the largest number of folks, most likely. It has to do with the hard copy checks, or the stimulus checks, as they're being called. I don't even think they're sending out hard copy. I think it's going to be either an electronic deposit or some kind of prepaid credit card as they did during the last round. But in short, if you qualify from an income standpoint, then you may be eligible for up to $600 per person. And $600, that just comes to you. But you have to qualify from an income standpoint. If you are filing as an individual, if you have an income of $75,000 or less, then you would qualify. If you file jointly on your tax return and you have $150,000 or less, then you would qualify for $600 per person. That's going to be based upon 2019 tax filings. That's a little bit different from the CARES Act that was passed earlier this year. They were using 2018 figures. This is going to be based upon 2019 figures relative to qualification, so be on the lookout for that. If you're just slightly above those figures, there's actually a grading scale where you can receive less than $600. But just in the sake of time here, I'm not going to go into the grading scale, but just be aware of it. If you are close to $75,000 per individual, $150,000 per married couple as far as your tax filing status is concerned, you probably are going to be eligible for up to $600 per individual in terms of distribution. That's going to come automatically. That's probably going to come to a linked bank account that you may have received a refund in previously, or like I said, you may get those prepaid credit cards. But literally as of the time of this recording, we are hearing folks starting to receive those distributions into their checking accounts. So definitely be on the lookout for that. Perhaps you are one who has already received that kind of distribution if indeed you did qualify. Part B, as far as that's concerned, has to do with dependent children. You could also receive up to $600 per dependent child. Dependent child as being one who is declared on your tax return as well. So if you have 3 children, it's possible that you could receive $600 times 3 for those dependent children. So be aware of that as well. Same income qualification as far as that distribution is concerned. So be mindful of that. Definitely be taking a look to see if those kinds of things, if you qualify, hit your bank account here. It's going to take a little while to get the funds distributed as well, even though I said that they're beginning to happen now. Just remember the scope and scale of what's being described here. We're talking about tens of millions of people who are going to be receiving these distributions. So logistically, it's a big issue. So if you don't get it right away, be patient, but definitely check into the IRS website or the U.S. Treasury website to see if there are any holdups or any reasons why you may not have received it, if indeed you did qualify. All right, so distribution checks or cards or electronic deposits for individuals, those folks who are married filing jointly, and also for dependent children. Next big item, unemployment insurance benefits. There has been, again, a bump up in the amount that you would receive if you normally qualify for unemployment insurance benefits. Now, if you have been on unemployment insurance benefits, you know that earlier this year, as a result of the CARES Act, there was a $600 per week benefit additional above what you would receive for, quote, normal benefits. It's different this time, it's half that. It's $300 per week additional in addition to your, quote, normal benefits for unemployment insurance. But you still have to qualify for it, and that qualification can be including reasons due to COVID-19, meaning not just because your employer let you go, but if there are conditions which warrant your business being closed due to COVID-19 or restricted severely due to COVID-19, you may be eligible for this benefit as well. So take a look at that, but also be aware of the time frame involved with it. This benefit, relative to this most recent act which has been passed, this benefit only lasts up until the middle of March. Let me say that again. Regardless of when you begin to receive your benefits, even if it takes a couple to several weeks, there will be back pay involved, but they only extend at this point up until the midpoint of March. So very important to keep in mind from a budgetary standpoint. You definitely want to plan for that because that mid-March point at this point is when those benefits will expire. So again, individual payments to individuals and couples, and then a boost up in unemployment insurance. One big item here, which is true for all of our student loan folks, and I know there are a lot of you who are watching this video, there has been no extension of the student loan interest deferment or of what we've called the payment pause, meaning that beginning in January, those payments are going to start up again. Now, that being said, I have had a lot of conversations with many of you about what this new administration may do relative to student loans. The bottom line is at this point we don't know because nothing's real until it's real. You've heard me say that any number of times. It is possible that this administration is going to try to push through Congress some kind of student loan relief. I'm not going to speculate any more than that. That's just based upon what this new administration has said is going to be one of their top priorities. So definitely keep that in mind as far as how you continue to pay down and pay off your student loans. But relative to the act which was just passed, again, no extension of those student loan interest deferments or what we're calling the payment pauses. So come January, those payments and interest owed, they're going to ramp right back up again, at least as we see it as of this moment. Small businesses, big deal here. Several new things that have been implemented on old programs, and I know that may sound like double talk even as I'm saying that, but the P3 loans, the payroll protection loans, which were instituted earlier this year, in March of this year, they're back. And there's additional funding which has gone into them, but there are greater restrictions in terms of the folks who qualify for them. So very important to keep this in mind. There were, for the obvious reasons, some folks who probably didn't need those loans who filed for them, received them. Some big employers even gave them back because they really didn't need them as far as the financials were concerned. There have been some modifications this time around. So very important to keep in mind. If you're a small business owner, and please forgive me for reading this, just want to make sure that we have the data as accurate as possible for you. There's a $2 million limit. So those P3 loans that you saw in the first round, which went up to $10 million, no longer there. $2 million limit as far as the amount of the loan which can be granted from the SBA, from the Small Business Administration. Maximum of 300 employees. So you must have 300 employees or fewer in order to qualify for this realm. Also, there's going to be simplified forgiveness if you get a loan of $150,000 or less. The idea behind that is it's narrowing the scope. It's becoming more refined in its process now that we saw some of the things that were the shortcoming of the first round of P3 loans. Now there's a very intentional part of this that says we want this to be truly for the small businesses. So there's going to be a simplified forgiveness process again if you receive this second round of P3 loans at $150,000 or less. Which brings me to a very salient point, because a lot of you have received P3 loans in the first round. So we've already had a number of questions from you saying, can I do this for the second round? You can. Even if you received a loan in the first P3 round, if you qualify again, you can receive a second loan. So very, very important, even if you didn't receive a loan or didn't qualify or did not apply for a loan in that first round as well, you can also attempt to make an application and to see if you qualify for this round. So again, if you received one in the first round, still can apply again. If you didn't do anything with it in the first round and you'd like to this time, you can apply as well. So very, very important. The refinements have come in as far as the IRS is concerned to try to make it indeed for the smallest of the small employers. But if you qualify in that realm, definitely reach out to your banker. You're welcome to reach out to us here. Happy to help you as far as that's concerned to see if that's a qualification point for you and to grease those skids and to move it along the way. All right. Along the lines of the P3 loans, we've had this conversation with many of you who own small businesses who received P3 loans. And one of the unintended consequences during that first round of P3 loans is that because there wasn't any clarity given from the IRS about using those funds as far as normalized business expenses are concerned, where you would not include those normalized business expenses in your taxable income, there was clarity given in this bill. So very, very big deal. I'm not going to get too far in the weeds on it other than to say the monies, if you receive them in the first round, the first P3 round, if you receive them as a P3 loan, if you use those funds for business expenses, that is not considered taxable as a forgivable loan. Let me say that again. If you received a P3 loan in the first round, and you use those for business expenses, payroll, etc. As the tax code is structured today, that could be considered a forgivable loan, or you'd be getting a, quote, double benefit. In short, you're not going to owe taxes on that P3 loan, even if you use them for business expenses and use that to deduct from your otherwise taxable income. Happy to dive into that further if you have questions about that, but for our small business owners, that is a huge point of clarification, especially as we're looking at the next round of tax filings here in mid-April. So again, P3 loan in the first round, not taxable to you if you used it for business expenses. All right, charity, couple of big items here. If you normally do the standard deduction, which was boosted up by 100% here just a couple of years ago, there is now another opportunity in 2021 to do what's called an above-the-line deduction for charitable giving. What that means is you can still take the standard deduction. You don't have to itemize your deductions. And if you'd like to give charitably, you can deduct up to $600 on your tax return in 2021. There was a $300 benefit with the CARES Act in 2020 that has been boosted up to $600. Not a huge financial benefit, but knowing so many of you are charitably inclined, if you are using the standard deduction, you still get a benefit of being able to write off $600 for charity for 2021. So important to keep that in mind as well. Along the lines of charity as well, a big, big item. This was included in the CARES Act. It's now been extended into 2021. And again, for you folks who are very, very charitably inclined, you can deduct up to 100% of your adjusted gross income in 2021 if you give enough charitably. Let me say that again. You can offset up to 100% of your AGI or your adjusted gross income in 2021 charitably if you give away enough money. That usually tops out in the 60% range, especially when we're talking about cash, and I should clarify that as well. Talking about cash contributions, not talking about gifts of appreciated assets or anything like that. Cash contributions, which you can offset up to 100% of adjusted gross income. So very, very big deal. That same benefit that we had in 2020, we are going to have again here in 2021. So very, very important for those of you who are charitably inclined. Real estate, especially if you are a renter or you have tenants. And this is true not only for folks who are in apartments, but also in single family homes. The eviction moratorium, meaning the inability for folks to be evicted, has been extended until January 31st. Foreclosures on homes has been, again, placed into moratorium until the end of February, meaning that banks are not allowed to foreclose on homes until the end of February right now. And renters, tenants, cannot be evicted again until the end of January, even if they're not paying rent. So very, very important to keep in mind. I know that's a very, very challenging subject, but definitely want you to be aware of that's also out there. Also, along those same lines, if you are a renter and you have lost your job due to COVID-19, if you are also in a space where you are significantly below the average median income for your particular geographical area, there has been a significant fund put into place, upwards of $25 billion as a result of this last round of legislation, which provides you some relief and some possibilities for addressing your rent and your utilities. It's very, very specific in terms of where you live, though. So very important, if you think you qualify or you know folks who may qualify, reach out to your particular county administrators or your county seat, your county offices, to see what the possibilities may be there. Again, if you qualify, folks you know may qualify, talking about assistance for renters and for folks who have been let go from their jobs relative to COVID-19 related challenges, financial challenges at work there. So let me just do a quick recap here. I know I just dumped a lot of material on you. Like I said, it was 5,600 pages, so be thankful that I'm going to end here in a few minutes. But just a couple of things to keep in mind. Again, direct payments, if you qualify from an income standpoint, it's based upon your 2019 tax return. Individuals with $75,000 or less in income, married folks, $150,000 or less, possibilities for $600 in direct payments per individual, and also $600 per dependent child, as noted on your tax return. Boosts up in terms of unemployment insurance. If you qualify for unemployment insurance, you may receive as much as $300 per week additional if you qualify for unemployment insurance. That only extends, though, at this point until mid-March. P3 loans, small business folks, if you own a small business, opportunities again to apply for a P3 loan. If you received one in the initial round, that is not going to be taxable to you. You don't have to worry about those funds being taxable on your tax return. And also you can deduct those expenses that you utilized with those P3 loans against otherwise taxable income for this year. So definitely a big benefit. Make sure that you keep that in mind. The P3 loans in this second round, though, quite a bit more restrictive. $2 million limit, 300 employees or fewer. There's a very, very simplified forgiveness process if you receive a loan of $150,000 or less. And again, just very intentional on the part of the U.S. Treasury and the Small Business Association to really make this about small employers, not intending it for it to be much larger employers. Talked about the above line charitable deduction as well if you're charitably inclined. Also the opportunity to offset up to 100% of your adjusted gross income again here in 2021, just like it was with 2020 with the CARES Act. Eviction moratorium, which is extended now through the end of January. Foreclosures, also now a moratorium on that extended through the end of February. And then the fund possibilities available to renters and to folks who are behind on their mortgage payments. If you are below the average median income for your geographical area, very, very important you reach out to your county officials to see if you apply for that. Well, friends, as I'm sure you can guess, this is nowhere near all the details, but I definitely wanted to get out there to you some of the details that we thought would be most helpful to you as far as this new round of legislation is concerned. Always, 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 though, if you'd like to reach out to us, phone call, email, I know it's the holidays, no big deal. We're checking all of our stuff and happy to hear from you, happy to answer the questions that you may have as we have those answers, and if we don't, I'll tell you that as well, but perhaps I can give you a space to which you can go to be able to find some more clarity to the questions that you have. Well, friends, thank you so much for your patience once again in listening to our update here, especially during this holiday season. I hope that for each of you that this is a very blessed new year to come. As always, it is truly our honor and pleasure to be working with you. Always feel free to reach out at any time. We always enjoy hearing from you. And until the next time, I'll look forward to talking with you soon.